All right. Okay, guys, I'm going to mute everybody, but if you want to talk, feel free to unmute. Allow participants to unmute themselves. All right, cool. All right, I got the chat up. All right, guys, let me know if you can see my screen. Hit me with a one or something. Just let me know if you can see my screen so I can go ahead and start. I got a fun one for you guys. Perfect. Let's go. Perfect. This one will be slight interactive around the end. But don't feel pressure to interact. But I got something for you guys. Right. Let me just get my little thing going here. All right. All right, guys. First of all, thank you for joining me as always on a Saturday night. I know it's like one of the hardest nights to come and learn about the stock market, but again, it shows your guys' dedication. I couldn't be more proud of you guys for coming in and trying to get better. So today's class is going to be on Confluence, or how to increase the probabilities that the trade is going to go into your favor. Um, right here, I have an example right here. This was actually yesterday, last Friday. We have XLF here on the 15-minute. Not only is it bull flagging here, you guys see this really obvious bull flag. It keeps putting in all these bullish candlesticks in a row. Not only that, it's also holding this EMA as support. So right there, that is three confluences working together to increase the probabilities of my trade. So you can set your stop at any of these three levels. You can set your stop at the other side of these buying wicks, on the other side of this EMA, or the other side of this bull flag. Those are three confluences that are going to help you with your trading. All right, let's go. All right, so confluence essentially refers to any time you see multiple trade signals that are all lining up on your charts at the same time. Trading it's essentially just a game of probabilities, and you want to stack as many signals as possible to increase the odds of those of a winning trade. You want to increase your probabilities as much as possible. You don't want to take a trade at some random ass spot in a chart without having maybe two or three things saying that the trade is going to go bullish or the trade is going to go bearish. You want to use multiple indicators that are all giving the same sort of reading to confirm the validity of a buy or sell signal. This one is going to be easiest to show on the chart. So this is going to have a lot of chart examples and a lot of a lot of examples on the charts. So we're going to be doing a lot of live charting here shortly. All right, so these from here on out, this is going to be charting examples. So right here, these are ES longs. We see here we've fallen down into support. Right here, things are looking pretty bearish, but we are now at support. We've fallen down, we're at support now. This blue area is a demand zone to me, so this is support. So I'm officially looking long now. So I'm going to look for signals long. We come down, bam, this is where we catch support. We come down, we come back up, we're coming up. And I'm not going to take a trade here just because we had our first bullish candle upwards, because there's not a lot of confluence. This could easily just keep going, right? So I'm not going to take a trade here. I'm going to be patient. And I'm watching. And then it's coming back down again, and things are kind of looking bearish. But look, it catches support here, and it's officially kind of a double bottom. But not only that, it's also making a lower high. So that's the market telling you that, hey, I want to come up now. Right there, the double bottom and the lower high. That's your first clue. Let's see here. What's up, BW? So next thing that happens, we're coming up. We make an impulse move, right? We make an impulsive move. So me personally, I'm gonna draw Fibonacci from the bottom to the top of the impulsive move. And now I'm watching, and you see we're flagging now. Not only are we flagging, we're holding the 0.5 Fibonacci at 44.7025 as support. At the same time, the EMA is curling and holding as support. I didn't put this here, but right here, when the EMA turned from red to green, that means the EMA has crossed over bullish. That means the 21 or 20 is now crossed under the 8 EMA, signifying a bullish trend. When the EMAs are stacked on top of each, I'm sorry, yeah, when the EMAs are stacked under your candlesticks, that's bullish. So that's 1, 2, 3, 4, 5. That's 5 levels of confluence supporting these ES longs, right? And look, you could have taken a trade right here, recognizing the double bottom, recognizing the lower highs, recognizing that we're at support. You could have easily taken the position here while we were consolidating here, recognizing that we're bull flagging. You could have set your stop just on the other side of this impulsive move here at 44.68. So if you went long here, your stop would just be 2 points away at 44.6825. So not only do you have all this confluence supporting your trade, you also have a really, really tight stop loss, maximizing the risk reward. You could even play it slight riskier and just make this double bottom where we caught our major support. You can make these your stop as well. I don't have the numbers, but it looks like that might make it a 5 point, like 3, 4, 5, maybe a 5 point stop here. But as you can see, you're risking 5 points to if you risk 5 points, you're making like 10, 20 points. So it's fantastic risk to reward. Again, this isn't where you could go long here and you would eventually be right, but you would have to sit through all this consolidation, all this drawdown, and then ultimately you'd have to sit through this right here, this huge drop, and you're not going to be feeling super well when this happens because you're not super confident because all you did was take it off this right here, the first bullish candlestick on a 3-minute chart. So you're not feeling very well. When you're taking the trade here, you're much more confident because you have all this right here backing you up, all this confidence. But this is why if you see me live trade, you're never going to see me take a trade in a random ass spot in the chart. It's going to be with multiple levels of confluences supporting my theory. All right, is there any questions so far before I move on to the next trade example? All right, cool. As long as you guys are following, I'm happy. Let's keep it going. All right. So these are the ES shorts. Let's see here. Let's go ahead and start. This is a pretty beautiful trade. Now I have looked at it even again. So we're coming up into resistance, right? We're coming up from down here. We're into resistance now, and we're catching resistance. So automatically, I'm thinking short because now that we're in resistance. So I'm going to be looking for, signals to go short. I'm not going to, if the trend wants to keep going, I'll follow the trend. But once we smash into resistance, my first thought is, okay, let me make sure this isn't the spot where we're going to reverse first before going with the trend. So the first thing I see here is this rising wedge. It's a rising wedge because you see these candlesticks back and forth with like these really small bodies, which is what it's a lot of indecision. Wick here, wick down, wick up, wick down, wick down, wick up. That's a rising wedge, right? That's a bearish. That's a bearish pattern. That's a bearish pattern at resistance, and it's a bullish pattern at support. So at resistance, we have this rising wedge. We break the rising wedge. And you could take a position here and make your stop probably up here for safety, the other side of the rising wedge. Mine would be right here, the trend line retest. You come up and you see it tests it perfectly. That's how you know it's a valid pattern because it gets retested. The valid patterns will always, well, not always, I'm not going to say that, but they tend to get retested a lot. And once you see that retest and rejection, you can go ahead and take that short. If you're not wanting to take it short yet, we're coming down, and now the EMA has crossed over bearish. The EMA went from red to green. The EMA is now the EMA, the eight, I'm sorry, yeah, the 8 EMA and the 21 EMA have now stacked above the candles, signifying a bearish trend. That's 2 to 3 EMAs um, above your candlestick. So that's like 3 levels of confluence right there. That's with this EMA, right? So now we're all this right here. This is already a bunch of confluence, right? But if you wanted to be even safer, and honestly, this is also an entry I would probably take myself if I didn't catch this one. I wouldn't chase this because now that we've broken resistance, I want to see if it keeps acting as resistance. I want to wait for it to retest. And it does. Right here, we retest it. It's still holding as resistance. So now you have all this plus this, the zone breakout, the retest, and now it's holding as resistance, the EMA and the zone. You can take that even further down. I'm using the 8 EMA, but this EMA specifically, this EMA signifies when the crossover happens, when the 8 EMA crosses above or below the 2120 EMA. If anyone's interested in that indicator, I'd be happy to show it to you after this, because it is this is one EMA that gives you a lot of information. So if you're an EMA trader and you want to clean up your chart a little bit, I do recommend this EMA because it gives you a lot of information that you as an EMA trader, want to know. Like specifically when the crossovers happen, right? Yeah. At the end, when I'm going over the trade examples and my personal conferences, I'll show you guys off top. So it is a really good indicator. And as you can see, it does signify, pretty good trades. Like just off that, I mean, if you're an EMA trader and you want to, like, I'm always, trying to get in on a blue discount candle, but I'm always recognizing, like, yeah, I could have chased this candle as soon as this turned from green to red, and just enjoyed it the whole way, right? But we all have our strategies. Again, this is just another confluence for me, and I'm always trying to stack up the confluences. All right, let's keep going here. Any questions before we keep going? All right, I believe this next one was actually called on our last live trading session, and I believe DW, is he in here? He's actually the one who called it out. He is. DW, do you want to explain this trade? You don't have to. You don't have to. But you were the one that called it out, and it is a beautiful trade. Okay. It looks like he doesn't want to. Okay, so DW called this one out on live, and it was just such a beautiful trade. I had to include it here. So let's see here. These are actually the Apple calls. And we called the bottom here. So we're coming down and it's looking fairly bearish here, right? And we're looking super bearish and we're looking super bearish. And we're finally kind of catching some buys here, right? We're catching some buys. But here's the resistance, right? Because this is where we drop. This is like major resistance. But we're now bull flagging. Another thing to note about Apple, it's kind of hard to find their zones right now because Apple is trading at all-time highs. So you really need to really use fundamental, your fundamental candlestick analysis, your bare fundamentals when trading Apple at the moment because it's trading at all-time highs. So it's going to be it's going to be a little bit more difficult, to identify its real demand, supply and demand zone, its real support and resistance. So it's I think in my opinion, Apple is going to be really good for day trading right now. It's really good at this type of fundamental price action analysis. So now that resistance is broken, we're bull flagging now, right? We're bull flagging pretty nicely. We're catching some buys, and bam, the EMA crossed over here, and it's holding as support. You see right here, we're holding as support. The resistance is broken, and we did not look back. I believe. I mean, this thing must have ran like 300% just off of this. And I believe you guys can correct me if I'm wrong here. I'm not super good at spotting these specific patterns, but this also might be an inverse head and shoulders. Again, you can correct me if I'm wrong, but this does kind of give me those vibes here. Yeah, I'm pretty wrong. All right. Yep, a Marubozo, the Marubozo candle as well. This Marubozo candle, thank you, Melina. It is an inverse head and shoulders. Okay. This Marubozo candle right here, without a wick on either side, that's an extremely bullish candlestick. No wick on either side, just that's a very strong candlestick that signifies a bullish trend. So, bam, all that confidence, and we could have rode that. Honestly, I think we could have rode that for the rest of the day until the end of the day now. And BW's analysis, I believe he must have also had a fair value gap somewhere. If you know about fair value gaps, I believe there's one like somewhere right here. It must be like right here on the 5-minute chart, like somewhere right here. This must be also a fair value gap that was being held. Oh, maybe right here. So here's the fair value gap. Just imagine it from here to here. There's the fair value gap on the 3-minute chart. And it was also holding that fair value gap. Because yeah, BW is a fair value gap. Hey, what's up, man? Yeah, BW is a fair value gap trader. So it must have also been on the 5-minute chart, but the fair value gap is also right here on the 3-minute chart, and it was being held as support as well. So that's another confluence right there. That's 4 confluences. So that again is going to give you a lot of confidence in your trades. You're not picking a random ass spot, right? You're not, imagine going short here because why? Why go short here? But there's this candlestick signifies to you that a lot of people did go short here. Look at that way. Like imagine getting trapped here because you took a trade on, I don't know, right? And we've all been there. I mean, I'm when I was, when I was first trading, I was, taking trades at random ass spots in the chart, so we've all been there. Let's keep going. Let me take a little sipperoo here. What's the next one? All right. SPY calls or puts. In the chat, using the information you guys see on the screen, what are you guys thinking here? Calls or puts? Take your time. I'm gonna give you guys here a second here. Let me hit this while you guys look at this and let me know. Calls or puts? All right. Jason says puts. Wally says everyone's saying puts. Everyone's saying puts. Everyone's saying puts. This wasn't a trick question, by the way. I wasn't trying to say, yes, this is my golden zone. This is the golden zone. I'm not trying to trick anybody. I'm really not trying to trick anyone. Let's see here. All right. It looks like puts is the answer. I wasn't trying to trick you guys. All right. It was calls. It was calls the whole time, guys. It was calls the whole time. I'll explain you guys why. I know. Again, this is going to go back to fundamental training. Damn, right here. Let's just start off. Let's start off, and we're going to look at the whole picture. Again, it's also in a golden zone. That's 100% right. That's what I wasn't even thinking about, to be honest, when I was putting this one together. This right here is breaking resistance and holding support. So we broke here and we put in 2 pretty bullish candlesticks holding support right here. Bam, we put in this huge thing right here. And then we started consolidating upwards. We were making these higher lows. See, right here. I should have drew it up here as well. This does, you could say this is a rising wedge, but the reason this isn't a rising wedge to me, the last rising wedge had these really tiny candlesticks. Like you couldn't really make a decision. These candlesticks, this signifies like a lot of fighting, a lot of profit taking, and a lot of people betting short, betting long. It isn't the rising wedge where like there wasn't really any buyers in sight. Like they weren't really doing much. Like these buyers, these are pretty strong candles back and forth, right? Not only that, these higher lows, again, consolidating upwards, and this EMA, it never turned red, and it was always being held as support. And damn, I believe we just trended all day. from here on out. So again, wasn't even yeah, wasn't yeah, that I know everyone thought puts. But again, that when things look like this, that's how they want a lot of people to think. They want you guys to think puts. So before you think puts, kind of zoom out, look at the whole picture, and kind of think like an institution. Like, what are the institutions thinking? How are they going to make the most money? How are the people? Yeah, yeah. How are the people? Yeah, the hanging men. Yeah, how are the people? But look where the hanging man was. Look at it where it was in the context of the chart. Like a hanging man at this point of the chart, imagine this forward action not being here. A hanging man at this time of the chart wouldn't really make sense to signify really a downtrend. Not only this hanging man was just holding this support here as well. See, right here was also holding all this. Is this the hanging man you're talking about? By the way, I didn't want to like. Is this the hanging man you were talking about, Alexis Santana? If not, you can correct me. But like it would have gotten me as well. But this it was also holding this EMA support. So again, it was all just holding support. It was all just signifying the market telling you that yeah, I want to keep going up. And again, I always try to think more like an institution. Like I'm always thinking like, how are the people that are selling the calls? How are they going to make the most money right now? The people selling puts right now are going to make a ton of money because a lot of people are thinking, puts right now because I mean, yeah, we are smashing into resistance, but like we're also holding support. And I bet the volume was really good on the buys. I should have had the volume down here as well. I'll go back and check it as well. Um, but we have all these things that we have all these confluence that are holding support. Um, yeah, you could think puts, but like we weren't breaking any EMA, we weren't breaking any support or anything. That's why confirmation is always super important. That's why like if you guys see me live trade, like you might see me miss the bulk of the move, but when I wait for that retest and I have all those confluences, my trades for the most part they tend to work out because I wait for all of these confluences. Like I'm not going to chase it long here. I should have looking back, but I rather would wait until confirming that the uptrend was still intact, and I confirmed that the uptrends are still intact by confirming higher lows, confirming that we're still breaking these highs, and all these, all this. Like I would have even taken a position right here, like these two candles right here, holding like this is a good trade as well. So again, the market has ways of telling you. Just always wait for your support, wait for your confluences. My confluences are always, market structure, my EMAs, volume, resistance. I'm sorry, these zones. Like, I will be looking short here, but I don't see any signals to go short here yet because we didn't break any supports. None of these supports have been broken. Again, if this gets broken, it's not like it's going to keep going. Like it's gonna retest. It has so much support to retest. Like it's not just gonna fall. You're not gonna miss the move. It's gonna damn. It has this. It has this. It has all this support to retest before confirming the downtrend. So don't think automatically puts because we're at just one resistance. Like yeah, we are at resistance, but we're also holding this support. We're also making higher lows. This support. I'm sorry, this resistance also broke way down here. So yeah. Yeah, exactly. Wait for the close under the EMA. So always have your confluences because that's going to increase, that's going to give you a safer stop loss as well. That's going to be like, if one thing fails, but I still have this thing. So, then that's going to help it's going to help your trade. It's going to help your trade a lot. So let's go for the next trade example. Exactly. It really got us big time, big time. I lost, man, yeah. But luckily I was still green that day, but that one got me. That one really got me. That was Friday, yeah. All right. Speaking, yeah. All right. So using all this information, what are you guys thinking here? Calls or puts right here. Again, I'm gonna put my little food here. Give you guys a chance to look at this. Take it in. I like it. Look at that. We got puts all day. See that? Exactly. Thank you. Exactly. And again, I'll go over trade here. Beautiful, guys. Beautiful. I love it. I love it. Yep, you did it. This is actually where, before I go forward, this is actually where we got scared out. This is actually where I got stopped out. Um, because I thought that we were going to keep going. I took a trade long, I believe somewhere around here, and I got stopped out pretty hardcore. I took a trade because we were holding support, and I believe we were also holding the Fibonacci level. I think we were holding the 786, right? We were holding some good Fibonacci level right here, so I took a trade long, and I got stopped out. Excuse me. But if you guys are live trading with me that day, I did take puts right there, and I hope you guys caught it with me. We did take the puts right there, and let's go explain why. Puts right here. So this again, let's start at the top here. Right here, this is a really good indicator. I should have, this is where I should have really, I think this is where I did get stopped out. So we had a bearish crossover. This means that now the ADMA is trading above, I'm sorry, it just crossed over, and it's the 21 EMA is above the ADMA. So the EMAs are now stacked to the upside, and the EMAs are above the candles. That signifies a bearish, a bearish trend. So you could have taken an entry right there. And I'm always kind of thinking about that, but I'm not gonna. So we're coming down, we're coming down, we're coming down. And now that we broke support, I didn't take an entry down here. I didn't take this entry here. I did not because we broke all the support. Like, we didn't take this short. I took the short down here. So damn, we were still under the EMA because I didn't want to take shorts because we were rallying all day. We had all this, right? Like, we had all this support that needed to be retested. So I wanted to wait until all this support had been retested, right? So we broke support, and we were just retesting it, and I still didn't take it because we still had this support. We still had this volume shelf. We were still under the EMA, but I knew, like, a day like today, like we rallied so hard, I didn't want to take shorts because I didn't want to take a big ripper candle to the upside, because I had just gotten stopped out up here. And I was like, no, this next entry needs to be very safe. So this was my entry right here. I took the 440 puts right here, and we were just consolidating the whole time. And but the entire time we were consolidating, we were still under the EMAs. We had broken all the support. We've broken all this, and this EMA was still acting as resistance. All this now has occurred. All this stuff we were just talking about has now turned into resistance. Again, that's so much confluence. So that's why I took a trade. That is why I took a trade short here. It does feel like chasing, but I had all this confluence, support, broken. It's now all resistance. These 440s, I sold them at like 440.50. I looked at the end of the day, and those 440s, they must have went 200% because SPY was trading at 438 by the end of the day. I bought these at 60 bucks. Like, oh man. Yeah, it's okay though. So that's why once you have all this confluence acting as, it all has your back now, that's when you can take a really safe trade. You can feel good about your trade. You can sit through the pullbacks, and you can enjoy the gains. Like, come on, like, that's how you're supposed to trade. You don't, like, you could have gone here, and I see all the confluences here as well. But for me, the safest trade was all the way down here, and it did kind of feel like chasing, but I knew all this stuff had my back, so I should have helped. What's the next one? I think that's it. Yeah. All right. So now, are there any questions before I go on? I'm gonna show you guys a little bit more of my. Hold on. I'm gonna. Let's see here. Yeah. So I'm gonna go over my personal confluences now. So I showed you all that stuff. but I also do this. And again, let's see here. Can you guys still see my screen? Not consumed. Again, yeah, I was, but we can go over that right at the end. I was, but again, MJ, I had all that other stuff. I had all that. Yes. Okay, we can all see my screen. That's perfect. I had all this other stuff as well. It also had all my back. I had, that would have just been one thing. But I had again multiple other things having my back. So that's why I went that way. So, all right, perfect. We're gonna move on here. Um, Perfect. So not only, yeah, man, that's why Confluence is very important. You gotta you, if you're day trading, you don't gotta look at too big of a picture, but like you gotta look at this. This is from 9:33. Like you gotta know what happened from 9 o'clock to 10 o'clock. So you got to be aware of all this stuff. But once all this stuff breaks, then you can go ahead and take your trade. And oh my God, this, and like again, here, look at this. This is beautiful. And then we caught a bid right in the golden zone. Damn. This is another entry I would have taken as well. The break, and we kind of retested here. I would have taken that as well, but I stopped trading like right here. Uh, Damn. Really good trade right there. Beautiful. Okay. So if you guys see me live trade, you guys might know this already. So not only do I have all of that, I also look at the entire market. Um, I look at XLE here on the left, and that's energy. I look at XLF here on the right, and that's banks. I look at XLK, that's energy, and I look at XLV, and that's healthcare. Um, I also keep an eye on Apple. Um, let's see, and I also keep an eye on Amazon. I would keep an eye on all the FANG names. I keep an eye on Meta, Netflix, because these are the ones that are going to move the market. If you trade the indices only, you're going to want to know what these stocks, what these indexes right here, what they're doing. You don't have to trade them, but these again is going to add major confluence to your trade. So again, that day when we took calls, not only was SPY doing all that stuff, but the entire market was in an uptrend. I mean, you guys see that XLK, XLV right here. It was all in an uptrend. MJ, this is also going to answer your question right here. Look at the entire market. Yeah, we were at resistance, but the entire market is still selling off. That's why it still didn't feel like chasing to me, because XLK technology, it was still selling off. XLV, just like the rest of the market, it rallied all day and then it started selling off. So I'm watching this as I'm getting my SPY puts, and I'm like, okay, all the market is still selling off. There's absolutely no buyers anywhere. Like, again, this is the 15-minute chart, and I always keep these on the 15-minute chart because, again, this is going to tell me the bigger picture, and I want to know the bigger picture on the whole market. This banks. This is telling me that like banks are in they're huge holding of SPY. Like SPY goes banks, energy, and or banks and tech or something like that. It's weighted that way with banks pretty heavy. So when banks are doing good and energy is doing good and technology is doing good and all these things are doing good at the same time, then SPY is going to be doing great. So you can take your calls and keep looking at the whole market and saying like, okay, the entire market is still heading up. So you can just keep an eye on these four right here, and add confluence to your bullish or bearish trades. Like Let's see here, where's SPY at? Like, when all of this is happening right here, at the same time, XLE is at resistance and selling off. At the same time, when SPY is selling off. You guys see that? XLE, XLF are all showing signs of selling off at the same time that SPY is showing signs of selling off. So this is going to add even more confidence to your trade. Just look at these, look at the entire market. Not only that, look at Amazon. At the same time, these FANG names are either, shooting up for the day, or at the end of the day, at the same time SPY is selling off, they're also selling off. At the same time, SPY and all these other things are selling off, Amazon is selling off. Amazon went from calls all day because it was at support, slammed to resistance at the same time that XLF, XLE, all these sectors came into their support or resistances. See, we're selling off, everything's selling off. Grab your puts, right? It's fine. Like, there's no reason to, like, until you see the market start getting a bid, there's no reason to sell your puts. There's no, that's just another Confluence. You have all this TA, and then you have these fundamentals that are kind of backing you up here. You see the market selling off. Amazon, Apple, they're all selling off. Meta, Netflix, when it's time to get SPY calls, the entire market's going up. When it's time to get puts, Tesla, Nvidia, they're all selling off. So that is another Confluence that I use. XLC and XLY, I'm gonna add them. I'm gonna watch them too then. Because again, these all add confluences to your SPY or few trades. Like if you trade the indices, like if you trade Qs or the NASDAQ, just watch tech. If you trade SPY or ES like I do, that's why I watch all of these. I watch all of these. So because I'm mainly trading SPY and ES. Come on. Discretionary and communications. All right, cool. I'm actually gonna add that to my watch list right now because I have some charting to do tonight. Let's see here. Oh, and I gotta show you guys, hold on real quick. I know you guys asked about this indicator. I'm gonna throw it up on the screen right now. XLC and XLY. Thank you so much. Again, that's just gonna add confluence to my trades. And again, guys, the market doesn't move as fast as you guys think. You have time to like check out the market. Like, look what's happening in the market. You don't have to chase every candle. Waiting for confluences still gives you really good trades. You have time to come, look at the bigger picture. What's the market doing? When on days that it's choppy, you're gonna notice the entire market being choppy. The best trades happen when the entire market is in harmony. You're gonna get those really choppy days when tech is kind of chopping and energy's chopping while small caps are going or this is going. If you're trading the indices, you kind of want the market in harmony. I personally like it when energy and tech are doing something. I like it when I like it when the whole thing, when they're all doing the same thing. But like when a lot of them are doing the same thing, then it's fine. When one or two of them are doing one thing that's opposite of the next thing, it's still, as long as the majority is kind of doing the same thing, I'm good to take a trade. But when they're all giving me mixed signals, I kind of, I might step away for the day. Like, if you guys know me, there's days where I'll be like, I hate this price action. I'm probably not going to trade today. Like, if the entire market isn't showing me signs of like we're trending or like we're doing something other than chopping. But luckily, we've had some pretty good price action, even though this week has been weird. Okay, so this EMA real quick, let me show you guys. So this EMA that I use, and this credit goes to Moody because he showed me this EMA. So right here, if you guys want to throw it up on your or take a screenshot here, it is multiple time frame continuity with crossover rates. right? We'll check out the spy chart in a second and find out because I did just do my spy chart here in a little bit. And yeah, we can do some overall market analysis here. You guys got that, and then here are my settings for it personally. You guys can kind of mess with it yourselves, but I have it set like this. So this tells me that the crossover happens on the 3-minute and the 15-minute. Because again, I'm a day trader. I like the more momentum style plays. So I like the 3-minute and 15-minute knowing when they cross over. So I do that. And then I have all this other stuff kind of crossed out because I don't need it. You guys can mess with it. All I need to know is when those EMAs cross over on the 3-minute and 15-minute. And then right here is just the style. You guys can mess with it. Again, I don't need to know a lot with my EMAs. I just need to know, these cross up and, cross down. That's all. That's all I need to know about. So again, so you guys can mess with it. And let's look at SPY real quick. Let's see, DC demand at 438, 437. Let's see what we have here. Oh yeah, we're actually in a golden zone right now. So yeah, not only we're at support, we're at really, really important support. We're at a golden zone. And I believe we're at a golden zone that is in an uptrend. Let me make sure. Let's see here. Yeah, so we're sorry. Oh my god. I don't know why it's being an asshole. Sorry. Um okay, there we go. So we are holding the 0.5 of the overall trend. This is why it's a golden zone. Because it's a supply or demand zone that falls within the zone of the overall trend. And yeah, we're holding the 0.5 right now. So we could visit the 0.5, see what we do around there. I don't see us really reversing here personally. I just see us chopping around between 437 and down here 434. So I believe if this zone breaks, we're probably going to visit the 0.786. Just because the rally has been so strong, and I do think we need kind of a like maybe a 430 retest even, because like this rally needs some steam just for the health of the overall trend, because we're starting to get bearish candles here. Oh yeah, not only that, but we've started trading underneath the ADMA on the daily, which is not a super good sign. But we can look at the weekly here. Let's see here. So yeah, this is looking like a pretty bearish candlestick on a daily, right about the 0.5. Yeah, yeah, I could see it, but I would again wait for Confluence, because I would want to see this golden zone break. I'd want to see this volume shelf break. Once those two broke, because this is very, very important support. You know how SPY likes to fake us out. So I'm gonna wait for a lot of Confluence before taking, because look at the risk to reward short. Like I don't see anything until 434 area. So from 437 to 434, with potential bounces here at the volume shelf, like yeah, the risk to reward short is pretty nice right now. And then let's see, not only that, um, we have the bull market support band on the daily as well here. Again, acting as support. We have the 0.5, the volume shelf, and the bull market support band here. Most importantly, on the weekly chart, we're on an active sequence to the upside. It's very important for you guys to know this. Here's when we had our crossover to the upside on the weekly. It's very important you guys know this, because the last time we had the cross here on the weekly was way down here, May 2020. I believe that's like freaking COVID lows or something. Yeah, something like that. And then we had our crossover and we just ripped. You see how we've ripped for a year. we ripped for a year. We ripped for damn near 2 years. Um, and then we entered our bear market. We had our crossover here on the weekly, and then see every pop became a short to pop opportunity. We had some hope here. We came down to retest it and we failed. We never got the crossover. We never got the bullish crossover. It crossed the 20 SMA here, but it never quite got to the 20 EMA. And then we finally got a crossover here. And this happened this year. So we're still like, according to this EMAs, we're still bullish. And every pullback should be a buy the dip opportunity, but this rally has been so strong. Like, I do want to see some of this stuff get retested. Like for my long term, personally, like I'm getting to the point where like, I don't want to buy Apple at 200 bucks. Like, who else wants to buy Apple at 200 bucks for the long term? Not, institutions don't. I don't. Who's out here? I cannot believe this rally. There's a lot of people, they understand that it's a bull market. I understand it's a bull market, but I'm not trying to buy up here. Straight up. Not maybe Amazon. I can see Amazon. That's probably why you see Amazon kind of ripping now that Apple at all-time highs. Amazon's been like really, really, really going crazy. Amazon's really just been in this bullish uptrend right here on the daily chart. See? And again, this trend line got retested Friday and we closed underneath it. So who knows what's going to happen there. Again, I do think we need a pullback. But I don't think the whole market is going to pull back. I think it's just going to get rotated. Again, you can kind of see because energy, it was really only tech that sold us off. It was really these tech names because energy ended green. Energy ended up 2%. All these other ones didn't really, XLF ended green. China ended really green. It was just tech that sold us off, and I totally understand because who the fuck wants Apple at freaking 200 bucks at all-time highs? I don't know, not me. Meta's looking good here for a dip buy. So yeah, I do think we might be in. Look at the dollar here. Oh yeah, the dollar looks good. The dollar looks good. Let's see, this kind of worried me here that I don't really like daily. Right here, this is looking good to me. Yeah, we do have a potential lower high here on the dollar, but they all look like a retest of this bull market support band EMAs to me. I'm going to remain bullish, but I'm remaining bullish, but I want the dip, and I imagine there's a ton of people feeling like me right now. So we're all waiting on the dip. We all want Apple too, but we don't want it 200 bucks. So, maybe maybe this will break. But we'll see. The market, this market has proven me wrong. Like as far as the dip buys go, because I see a bearish day, and like, yeah, I'm thinking, okay, we're gonna get like at least a bearish week now but not really though. Inside week, we closed inside. You too. Let me see here. Right here. My zones are way down here. I stopped trading keys. Oh man, yeah, that's not looking very good. That's not looking very good. It is kind of in this channel though. So, oh yeah, that's not looking very good. Damn. Yeah, it's again. I'm not saying the rally is over, not by a long shot. I'm gonna wait for the news to start being like, "Oh, rally's over." That's when I'm gonna be like, "Okay, now it's the dip buy." Um, but until then, I'm not really interested in buying for my long term. Um, I'm gonna play the price action. I understand we're in a bull market right now, so I'm gonna I'm not gonna be biased either way. I understand we need a pullback. I'm more of a day trader anyway, so I kind of just look at what the market is telling me on that day. Geez, that was a beautiful trade right there. um, let's see. Oh, sorry. Yeah, exactly, man. They're just they're out here, and I hope I hope they make the freaking money because I want to make mine too long. I want to make mine long, for my long term, for the long term, because I'm more of a I don't want to say I'm more of a long term trader, but like it's more of my jam. I really like I really like that, crypto especially. But I wouldn't buy I wouldn't buy Bitcoin or anything at these levels. Not right now. Let me see here. Yeah, no, I wouldn't buy Bitcoin at these levels. Um, Again, this is actually how I got into trading. Just using this indicator on the Bitcoin chart. And then using the weekly chart right here. Um, Same thing, same thing. I was buying Bitcoin down here when we had the cross, buy it when it's under it, and then ride it up, sell it right here, or sell altcoins. I was selling a lot of altcoins around here. I don't like to sell. Bitcoin is a little bit more to me. So took a lot of profit here. Same thing. DCA, 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 DCA. Just buy a little bit, buy a little bit, buy a little bit when we're under these EMAs. And then now that we're above these EMAs, enjoy, you know. But there's several ways to play it. You could not bother with it until we get above these EMAs. See that? And then we could be good here, retest good. All we're doing is testing these EMAs over and over. So I would buy Bitcoin anytime we come down here to retest right here for your long term or even for the swing trade. If you guys are into futures trading on like KuCoin or BingX, do it on like 5x leverage and just buy it every time you come down here and you'll be good. And then same thing, you can just either set up your short positions or start getting some profit. Yeah, it works out pretty good. The EMA indicator, I'll pull it up again. I'll pull it up again for you. And I'll drop it in chat as well. Is multiple times let me see, I'm bad at typing. I dropped it in chat and it's on the screen right now. The indicator I use. And then also, if you were wondering about the bull market support band, this is the indicator I use on the weekly and daily chart. I just signifying me on the major trends. The bull market support band. And honestly, guys, if you trading is really as simple as you make it. I gotta like this strategy, especially with the bull market support band. You trade around the weekly or on a daily if you'd like. I personally like the weekly a little bit better. But for swing trades, I do like I got into Ford when it was about to make this cross on the daily, and I've been riding Ford ever since. Okay, I'll show you Ford right here. First of all, shout out to Moody because he was talking about Ford. He got me to look at the chart. So I was looking at the chart, and when he was talking about it, it was somewhere around here. We had just crossed on the daily, or we had just crossed on the somewhere around there. Oh, that's what happened. Yeah, so it was around $12, and we had just crossed somewhere around here. We had just crossed on the weekly. So that tells you that we are now in an active sequence to the upside. And every dip should be a buy the dip opportunity. Not only that, but Fibonacci, the one I'm using from this I'm sorry, I'll show it to you right here. This Fibonacci right here. I'm using it from this low to this high on the weekly chart. Have it extended over. And at the same time that this was happening on the weekly chart, we were holding the 0.618. So now I have, again, multiple conferences on my leap trade. I'm using the Fibonacci extensions as well as my price targets. So since I bought it here at the 0.618, I don't expect to sell it until up here. Given the way it's going, I might actually sell some of my position and get in on even more leaps on a dip buy, because the January ones they have less than 200 days left on it. So I'm probably going to take my profit on them, probably around 17, 18 bucks, 16. I'm gonna see how it acts here at the swing high here. But I'm gonna take my first profit here around 16 bucks. Not only that, I'm totally aware of this as well. I have my fib up. And I also have the Fibonacci. I also had it drawn from this swing high to this swing low. Oh, do I? Where, I don't know. I have it somewhere. Let's, these levels right here are the Fibonacci's of the opposing. Let's see, are they right here? Oh, yeah. Hold on there. Let's see here. I have them somewhere here. Well, either way, I have these levels here as a opposing Fibonacci, just so I know where the downtrend Fibonacci levels are. So I know 1480 is the 0.5. I know 1640 is the 0.618. I know 18 bucks is a 0.786 of the overall downtrend. And I also noticed here on Ford, we broke 1480 and we caught here on the hourly, we broke 1480. This is the 0.5 of the opposing Fibonacci, the short Fibonacci of the downtrend. We broke it, we bull flagged right on top of it, and we're on our way up. We have kind of surprising wedge action, and it looks like we're going to come back down and retest it, which is fine. My stop loss is actually right here at the 8 EMA. I'm gonna take all my profit. I'm up pretty fast. I got it at 12 bucks, but I'm gonna take my profit if this breaks. If the 8 EMA on the daily breaks, I am going to take my profit and probably re-enter as long as the trend is still valid. Because I have, again, I only have like a less than 200 days left on that leap. I still want Ford. I still want Ford to like 20 bucks, but I'm gonna want more timeline at this point. So I'm gonna look at the 2-year ones, probably on a dip to like right here. If we get it, if we get like a really good dip, you know, if like 1480 breaks, if this 80 MA breaks, I'll take my profit and I'll wait and see what happens like around this area. Again, for these EMAs kind of act like a magnet. Once one breaks, the other one normally gets retested. You just got to be patient. Yeah, I'm noticing the same thing. But luckily, again, I got it right here. I'm up like 150%, so I'm good. If this breaks, I'll still be up like 140% or so, and I'll just take my profit and be done with it until one of these get retested. I do see a possible head and shoulders forming on Ford as well. So yeah, we'll see. Yeah, we'll see. I have my eyes on Ford, especially because the overall market does seem to be pulling back. Oops. Oops. On the daily chart. Yeah, yeah, the daily chart looks like it wants to retest the bull market support band. The weekly chart is what has me really worried because these EMAs are really far away. It's like you got 414 down here, 430. This is what I'm saying. 430 needs to be retested because the EMA is at 430. Not only is it a psych level, but yeah, yeah, you're saying the same thing. Yeah, yeah, man. Look at this. This is looking good for the market. So yeah, we're gonna keep our eyes on it. Again, we're gonna give the market take what the market gives us. Um, let's see. I mean, looking, Bits is back on the rise. The dollar doesn't look too good, so it might be one of those things where it's like the bulls, laugh in our face again, and they just hit us with like a, like nope, not yet, and we get another face ripper here off only one day's dip. But who knows? I'm totally just gonna. I'm more of a day trader anyway. This stuff I'm talking about now. It's more for your swing trades, or for me personally, it's more for my long term. I'm waiting for like a retest of one of these levels to get loaded up long, because again, the last time this cross happened, we ripped for a year. So I have no reason to believe that we're gonna give back all these gains. I just believe that we're in for a massive dip buy opportunity. Um, so I wouldn't load up short, like I wouldn't load up short for your long term until something like this happens, until you see a weekly cross. And the weekly cross gets retested over and over. And look at that, you just get paid until the weekly cross happens again. The weekly cross happened at 389 here on SPY. So if you would have got your SPY leaps as soon as your weekly cross happened, like this happened January, like you're paid, man. So yeah, that's all I have for you guys. Hopefully you guys get value out of Confluence. Hopefully you guys kind of see my secret little Confluence here. Um, my little keeping an eye on the whole market. I keep an eye on the FANG names as well because they just they move the market. Amazon, Meta, Netflix, Google, Tesla. Sometimes I watch Nvidia. Um, but my main watches are these sectors: XLE, XLK, and probably now the ones that you suggested. What were they again? XLC and XLY. Yeah, I'll probably put those on I'll draw zones on them and everything. Because again, these things tend to happen at the same time. Like as soon as we had our sell-off, XLE broke the golden zone when we started getting really like when our rally really started going was when XLE's like once these things started happening at the same time, XLE broke the golden zone. XLF broke its bull flag. Once we started selling off, XLF, came into resist or XLE, I'm sorry, came into resistance. You know, XLF put in this event or put in this really, two pretty bearish candlesticks in a row. You know, um, XLK technology gave back all of its gains for the day. It's just it could not hold support. It could not, it couldn't do anything for the day. XLV, but at the same time, we were getting calls when the market was going up. The market is telling you that SPY, if you're trading the indices, especially, that you should know that you don't have to. I mean, it just helps to know. If you're trading SPY, or if you've ever traded SPY, you notice that it's been super choppy. It might help to check out the rest of the market and be like, oh, it's because all these other things are chopping too, or XLE and XLK are chopping. Yeah. So yeah, that's all I have for you guys. Any questions before I get out of here? All right. Sounds good, guys. I am out of here. I'll have a recording of this one ready to go. And I'll drop it in chat and everything. Let's see here. All right. All right, guys. Again, thanks for joining me on a Saturday night. I am so, I really appreciate it. Yeah, no problem. No problem. Again, I really appreciate it. It's, coming in here on a Saturday night, it really shows you guys dedication. Hopefully you guys took value, just remember, yeah, no problem. Yeah, just remember, stack your confluences together. The more confluences you have, the better with your confirmations. That's why, I have, the EMAs, I have the Fibonacci, I have my supply and demand fields. Those three, that combo works for me perfectly. You might have your own combo. Yeah, no problem, MJ. You might have your own combo, use your own combo. If you have, one strategy, just throw an EMA on there, see how your strategy works with the EMA. It's all about stacking your chronicles. And it's gonna treat you better than just picking a random ass spot. I used to do that. I used to pick a random ass spot, but now I'm always like, okay, this, and this. I'm going short or long here. All right, so that's all. That's all I have for you guys. I'll drop this in chat shortly. All right, guys, have a good one.